The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As we start the show off, we're taking a look at a market that, I can't believe it, it's down. And it's down more than a point. It cannot be. They cannot let this stand. They're going to put a line in the sand and then erase it. Anyway, we're off 6 points in the S&P cash. What is different about today? We got some volume, folks. 2.3 billion shares as we start today's show. So we've got some volume. Market sold off a little earlier in the day, kind of came back. Volume was very light on that pop. We are under, 2180. I'm going to make a big deal out of it, but I am going to say that the volume being up about 10 or 15% at this time of day is at least giving us some edge in the market that we have not had for a while. So what do we got going on out here other than that? Very quiet day in the market. 6 points would normally not be a big deal, except we had all the combinations. Everybody was bullish. Everything should go higher. Crude is going higher. Why isn't the market going higher? And we're kind of looking at a market at highs that no one wants to buy the breakouts. Maybe this is right. I wrote about it, I think, on Tuesday. Yeah, on Tuesday in the newsletter. But one of my heroes is a guy named Vernon Smith. He started in the 80s actually getting traders in a room and giving them like $100 and letting them trade during the day. Then they would, it almost all ended up being a bubble every single time. But he did kind of something different than most economists. He actually tested people with real money, with people that would win and lose. What he found was when he brought the people back a second and a third time, guess what? The bubbles became much smaller. People didn't make the same mistakes. They sold when they could, not when they had to. And that made all the difference in the world. It made markets a little bit more trading. It worked the same way, whether people had it, people were on the floor of the options exchange and or if they were just people off the street that didn't know a lot about trading. Always turned into a bubble. Most of the tests that they gave let them trade for 4 hours, and everybody kept moving the price up higher and higher, and very few people sold. And the deal was that whatever money you had in your bank account when you left after the 4 hours, you got to keep. And some people walked away with a lot. Most of them, of course, waited till the last second to sell because the markets just kept going up, and they ended up with nothing. As always, we like to meet you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, that's a little different. We like to meet you at this time and talk a little bit more about it, but we'll watch how the rest of the day goes out here. But options, kind of like last month, are pointing lower. They're pointing lower enough that would make me say that the chances of higher prices are very slim. But we've got Fed that I guess calls the Treasury and shoots another injection of dollars anytime the dollar index looks like it's looking like it would break out higher. What do we have right now for it? It's up 9 cents, $95.04. But every time we start pressing about 96, it looks like the Treasury's out there with a fire hose of cash to put out any fires in this market. And of course, anytime we do look like we're going higher, the dollar index starts to move higher too. We have to look forward to the Fed announcement, which will be, in the 22nd or something like that. So we got a little bit of time for that. Options expiration a week from tomorrow. So there are some trends and counter trends out here, but we'll continue keeping an eye on them for the rest of the day. NASDAQ's off at 28, and the Dow's off, what was the last time I looked, 60 or so. So we will continue on.
And it's all just a little bit of history repeating.
It is nothing but history repeating. You can give me an email at path@tfnn.com. You can call me at 877-927-6648, or you can post messages in the den. And what do we have for Histoire today? Well, in 1930, Minnesota Mining and Manufacturing sends out its first shipment of an amazing new waterproof, transparent product that the company thinks may have large possibilities. It's called Scotch tape, from the stinginess from which the company first coated the surface with a small amount of adhesive. It's a rapid success, and in the depths of the Depression, penny-pitching Americans use it as a cheap tool from everything from resealing canned foods to helping torn fingernails heal. And, of course, now the king of the Post-its, everything else that is office around and thing. But humble beginnings this day in 1930. Unhumbly, Wells Fargo is out here breaking the law again. Regulators and prosecutors are investigating whether Wells Fargo pushed employees too hard to sales goals meetings. Wall Street Journal has previously reported on this, and in May 2015, the Los Angeles City Attorney filed suit against them, but looks like this is getting now down to the part where they're going to have to shell out some cash, and it's probably at this point where we as U.S. citizens should ask that people like this are not allowed to say no contest or not admit to criminal action. But looks like even Wells Fargo, the biggest bank out here, has its hands caught in the cookie jar one more time. What else is going on? After the bell, we've got Restoration Hardware. Still, we've got pretty much until October before we have earnings ramp back up. And so in the meantime, we're going to have a few of these. Restoration Hardware, of course, did not do very well the last few times. It's been under massive strain. Other things going on is we had a nice little reversal in Apple. And while a lot of people are probably putting some spin on this, I look at this as one of the issues, mostly because when the news came out and when this thing really started accelerating down, there was a little bit of news last night in this, but the real news came this morning in Apple basically commenting and saying they will not be giving forward projections based on pre-orders. And that makes everybody think that the pre-orders are not going to be big, or that Apple doesn't want to get into it. Let me put it that way. That put pressure on Apple. It's gotten down fairly close to 105. We'll talk more about this and more in a very special edition of the Power Trading Hour.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're talking about Apple. You, of course, can give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, post messages in the den. Got very light and variable. Dow's off 62 or so. S&P and just under that 2180 level. So we'll see how we close out here today. We had a lot of volume into the close yesterday that I thought was very interesting. Right at the bell, a lot of selling. And I thought, well, this would be very interesting to see how today shows up. But it was very... as a word, probably an overused word, but it was yesterday, and I thought, wow, this is very interesting. A lot of selling coming in right at the close yesterday. I thought, hey, we're starting to see this thing. In fact, when you look at Apple yesterday, you had about 3 days of Apple going up. Of course, you had the big weekend, but really just didn't have any juice going back up into that announcement yesterday. Of course, down today, it's going to have, probably about 45 million, 50 million shares by the end of the day at least. So we'll keep an eye on it. But I'd been thinking that this thing was going to come around where this double gap is, which ends up coming in about 101. And I still think that. So, if you're a big Apple fan, think about 101. The other thing is that they really haven't put down a firm date for shipping. A lot of people were very interested in Apple kind of pushing the release of, or at least the announcement of this out. The thought was that they were doing this to get on top of Samsung's problems with their phones melting. Oh, I have an email. What kind of phone do I have? Bought a Motorola 4G not too long ago, 4G Plus. And it was unlocked to begin with, so I can take any carrier I want. works anywhere in the world, was $150. You know, if I actually used a phone a great deal, I probably would buy something like a Note 7 or an iPhone. But you know, almost 9 out of 10 times I'm on the phone with somebody, it's on Skype. I get to wear my headphones. I've got a great speaker. I can keep my hands free for typing. I'm just not a big cell phone kind of guy, other than carrying it with me and having access to the internet while I'm out somewhere. Tends to be the main use for my phone, my cell phone anyway. Anyway, we're talking about Apple. There's just not a lot of juice. There was some downgrades today on Apple too, but I don't put a lot of weight into those long term. But I don't know. I just want to sing B.B. King's song, "The Thrill Is Gone," because that's pretty much the way it is. But you know, 101, 175 cents, something like that, is probably going to tell you where Apple, if they're going to be able to hold that level. My guess is that when they do give a shipping date, that will probably put a little bit of of support underneath Apple for what they're doing. And the company's not going bankrupt. They'll continue to sell stuff. It's just whether the law of large numbers has permanently caught up to Apple, and it does seem like it has. Other interesting action out here has been kind of a reversal. Oh, not on IBM. I wanted to go IBM. Kind of a reversal on IBM out here. Been watching that one for a while. I like some of the new businesses this company's in, but I certainly think that it's due for and overdue for a pullback. This one had a lot of push yesterday, never really could get much going. You can maybe say that this is in a very light ABC on the way down. So if we want to take a look at that, just go select this A, Mr. B. This is kind of a tiny one, but this would take it to 154.66, which is kind of where I've been looking around. And of course, there is also yet another double gap right at that level. The first is the gap down at 154.61. You know, what is that? June 24th. Yeah, June 24th, this thing gapped down with 9 million shares. You kind of went through that. You never really had the kind of volume that I would have liked to see. And so this thing bounced off the 164.95. My guess is that support will come right back into that level, as we've talked about. That's 150. Just a 1-to-1 right now would be 154.66, which is not a whole lot on this thing. But I think those double gaps would be where you want to look and see whether this thing does find support at about 150. And let's call it 153, 153.50. But the way that this one really acted today and yesterday was giving me an idea that at least some of these stocks in the NASDAQ it pretty much performed as well as possible off of the British exit lows. Continue to kind of get an indication that we are range bound. It did give a nice little signal out here. 142.61 on April 19th. It had 13 million shares, came in it with 5 million shares. We did buy this in the Tech Insider and sold it above 160. But it is a kind of a nice little, or was it in the newsletter? Could have been one or the other. Can't remember everything these days. But anyway, the 1 to 1.382 would take you to 151.95, and that one would be interesting to me too, because that's just underneath those double gaps. So put a little signal, put a pin in that one, and we'll continue on. What else do we have out here? A couple of more questions. What do I think of Facebook right now? Nope, I do not own an iPhone. Never have. And what do we have here? Well, you had some volume in Facebook. This thing, and as I thought, we're kind of around peak social media right now. This thing on earnings popped on the 28th of August with 78 million shares yesterday, or on Friday, you kind of got into it with 26 million shares. Yesterday, 27, I call it 20 million shares. Today, just 11 million shares. Almost all the money is flowing into this one, and maybe a couple of stocks. Amazon, and kind of call it Amazon, maybe a little bit of Netflix, but not a whole lot. But my guess is this thing, without being able to get the energy that it really needed to show yesterday, seeing a little bit of shorting into yesterday's kind of blow off top, and then a little bit of a pullback here. I think this thing's probably coming back to the 122 area. We'll look at Netflix when we come back. That'll handle our FANG stocks, and then we'll look for other things. We'll go through some of the emails. Hopefully someone will give me a call. I don't want to be the Maytag repairman that's lonely. Give me a ring.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Take a little look into the markets out here. And Dow's off 56 points now. So, what can you say? I don't pay much attention to the Dow, but it's the only thing kind of sort of moving. up and down. So maybe it is so quiet that I'm willing to pay attention to that. 2180 on the S&P cash, although volume continues much more briskly than yesterday. 2.45 billion shares on the New York Consolidated tape as we speak. So what do we got here? Let's close that. Let's get into some of my test stuff. Wanted to see how some of these stocks were reacting. Box has been on a big push, had some volume yesterday, unable to continue over the September 9th, 2015 high, though. If you're unfamiliar with this company, they are a big cloud bunch. The CEO has been kind of acting a little goofy. I was wondering how the market, the street, after his performance. He's running with a Donald Trump, make software, kind of a Donald Trump, like make America great again hat, but it's make software great again. And I don't know, it just seemed goofy to me and maybe a little immature. The guy looks like he should be, just getting out of high school. I'd probably, if I was advising him, would probably not want to act like someone that I couldn't trust their money with. Down, light volume so far today, but this is a stock you want to be watching, at least for cloud services. The thought is that someone would buy them out, but I don't. Everybody that's big and scaling already, I just don't understand why they would buy Box. This company really, biggest competitor is Salesforce, and I don't see that they, like everybody's talking about now, have the kind of scale to go after them. Maybe someone will buy them out. It's very tough for me to see anybody that it makes sense for them to buy out that doesn't have to be, that would already be a player in the field, already has their own cloud services already. Colony Financial. Don't know a lot about this one. I did like the way it tested the May 9th high of 4.2 million shares at $19 yesterday with 2.4 million shares. No big surprise, back into the trading range. Probably the biggest thing that did hit me over the last day when I was looking through it was Disney. And thought, well, Disney, going to have some light volume out here testing its previous low of June 27th. The volume did decrease, but certainly on a light volume day, I would have liked to seen or thought that this thing, if it's still the darling of Wall Street, would have come in with maybe 5 million shares or 6 million shares in the last couple of days. And actually, today's kind of be a lighter volume day. On Friday you had 9.4. Yesterday you had 6.2 million shares. Most notably is the energy on the way down from 106 on May 10th down to the $94 low on June 27th. You literally had about the same amount of energy from July 14th down to today. So I don't really see a lot in this. Probably wouldn't short it here. But if you're going along, you're basically got a great resistance level now at about 98. If it went back up to 98 on very light volume, that's where I'm thinking that you would pull the trigger to get this one short. A very beautiful confluence level back there if you're not already short. What else do we have going on in my list of stuff? Inesco, ESV, nice little test. I think we talked about this one a couple of days ago. Tested its 15 million share low on February 25th with 15 million shares at 725. Pierced it by 9 cents on September 1st. Did it with 9.4 million shares. And what else did you do? Well, you got a nice little push up here today, but for the volume, not so much. Just a lot more churning out here on the bottom. What else do we have? Iron Mountain. This one kind of very interesting to me. Looks like it could be in an ABC down. Very, very light volume. If you have been following Mr. Robot on USA, if you don't know what it is, it's a kind of one of those summer series, kind of like Suits and some of the other ones that run out there on those fringe cable channels that have, a handful of shows that are new scripted TV shows. Anyway, Mr. Robot's all about hacking, and they write it very close to what's going on. So you see a lot of stuff that is in the news every day for computer hacking. But one of the things that they did, which you'll find out fairly quickly in season 1, is they go after a company that's big deal is to destroy and long-term store data. Iron Mountain is called Iron Mountain because they bought a iron, what do you call it? An iron mine that goes way back in, and so pretty much it was all basically ironed out. So it had been empty for a while, and went in there and cleaned it all out and made it an underground storage facility, just one way in and one way out, and put offices and storage for everything in there. If you're unfamiliar with Iron Mountain, they're these guys that drive these trucks around, but instead of doing a Hillary and beating your device with a hammer, they have chipper shredders where you throw your devices in the back of the truck and they shred them. They also take your documents and make sure they're shredded, and they take your backups into that deep, dark Iron Mountain. And with all the iron content in the that's still around it, even if a big EMP bomb went off from Russia anywhere around it, it's supposed to be able to withstand any kind of nuclear EMP that would wipe out everybody's data from now on. In the show, of course, they decide to figure out a way to melt everything down. It didn't quite pass the smell test for me in the TV show, but it was an interesting thing. Anyway, Iron Mountain, nice little retracement out here. And we'll look at the expansion on this guy. Kind of a little different to think about how this one would fail. I don't see the underlying fundamental reasons why, other than everybody just kind of cutting back on everything. Anyway, did a 65% retracement of this huge down. What I really liked was the energy up on my power law vector indicator number is like a 1.9, 3.3 on the way down. So never really got a lot of juice back underneath it. A nice move down with 1 million shares so far already. But this thing looks like it's been trying to top out for a while. Not enough volume yet today, but a lot of times you don't get it the first day or two. But it looks to me going back to 36.38, this low from August 9th. Well, keep your dial tuned to this station.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And what do we got? Iron. I had a question come in about Iron Mountain. Is it heavily shorted? And the answer, kind of no. On the 30th of August, though, there was a huge short come in on that one. And what did that close at? 38.40. So kind of right in this area, this big, that's got to be the 30th right there, doesn't it? Where is that? 8:30, 9:30, 8:30. Yeah, 8:30. Kind of day went sideways, but a whole lot of people shorting it that day. Kind of interesting. We're at least back in that level. But some big hands already getting short that. What else do we have? Got some other things going on here. Checking out some email. Question in the den. Is Box different than Amazon Web Services, Microsoft's cloud, Google's cloud? And the answer is yes. Microsoft, of course, has a huge back end of business services that they sell on top of their cloud. Google has, of course, all their stuff. Probably the biggest thing that Google has now is TensorFlow, which is a machine learning program that they use for just about everything. But they have a lot. All these, Microsoft has an R engine for machine learning. All these companies are big into the machine learning packages that they can sell and push. That is the problem with Box. Box kind of goes up against Salesforce CRM, but doesn't have near the depth that CRM does. Doesn't have near the backing. Box was kind of pushed out as an IPO to get enough cash to maybe go to war with CRM, which it's much closer to than Amazon Web Services. The question is, why is Box more closely tied to CRM? That is, CRM doesn't try to get customers that don't buy their software. Microsoft, Amazon Web Services, Google, both sell their cloud and then try to sell you their additional services. CRM, not very interested in selling its cloud, only its services. So kind of a little different tact in there, but Box kind of the same, kind of closer to that, but hasn't really ever been able to catch hold. Just a little different out there. It just seemed to me like a company that was on the edge of probably failing without a lot of cash injection. They pushed the company out public probably before it needed to come out. And now, again, LinkedIn, probably a great example. said that they sold to Microsoft for one reason only, and that is without the kind of money and backing that you need at scale for social, they just didn't think they were going to make it. I suspect that Box is the same thing, that maybe if anybody was going to buy them out, it'd be CRM, but they've gone through an orgy of buyouts in the last year, and when CRM got hit on earnings, that's a good one to check in on now. A lot of it was kind of a promise that he would lay off the buyouts until we started seeing what was going on. That was last week on the 1st of September when this thing cratered under 27.4 million shares. It was very tough to figure out, this one too. Normally, everybody's been trying to buy these things back. This one has continued to slide, and I suspect a great deal of it is the ability in its books to continue doing what they've done before. If you look at the Power Law Vector Indicator number 2, this thing actually picked up on its move from July 21st all the way down to the September 1st low that it's getting ready to go out there and test, which is 74.06. But, I think everybody thinks that someone's going to buy Box. CRM would be the most likely one to buy Box. And what's his doodle? I can't remember his name right now. He's kind of a blowhard that is the CEO. I'm trying to remember his name right now. I think he reads I get the impression he reads his press far too much and believes it too much. Everybody puts their pants on one leg at a time, provided you have two legs, I guess. But kind of a little bit of full of himself. And that happened. I had that impression distinctly before this stock kind of cratered. But you got two big gaps in one. Kind of expecting a third gap down, actually, before this one actually bottoms. I don't see the caller. We're going to go to Edwin in Wilmington, Delaware. How you doing, Edwin?
I've been doing good. I'm looking for Nike, NKE. What's going on there? What be going on?
What do you want to do? You want to go long? You want to short it? What are you thinking?
I want to buy, but I don't know. It's got some gaps going back to 2014 at $25, and it's split 3 times since then. So will those gaps get filled?
They don't have to. The question. Let's go back here and look. Just in the near term, though, you're probably going to come back and test this high volume gap up on, the 29th of June at 36 million shares. Probably going to come right around in that 53 level. It's one of these, I don't know if you've been listening to the show for the last week or two, but a great deal of these stocks all have double gaps in them. This thing gapped down on the 24th of June. It gapped up almost identically the same price point on the 29th of June. And when they double gap up there, watching on Tiger TV or the Den, I'm pointing at it with my mouse here. You got that gap down, you got that gap up. These stocks tend to come back down and bounce off that level a few times. So if you were thinking about buying it, I would put that off until it comes back down to $54. And how does it get into that $54 gap? If it comes in there with light volume, looks like it's going to bounce, that may be a place you could buy it. If it comes down, energy starts building, then that means that maybe those gaps below that might get filled. But right now, it doesn't look all that bad. I just think that right now, I don't know how you could make a decision other than waiting until it gets to that $53.5, maybe $54 level.
Okie dokie, sounds good. I'm gonna go get myself a pair of Nikes instead of cheap.
Okay. What, are you a runner?
No, I'm a boxer.
Okay.
Right.
Well, keep those counter punches going.
I will. Thank you, brother.
Okay.
Take them a local.
You bet. Okay. Other stocks of interest. We got off here on IQ. We talked about Iron Mountain. Lowe's also starting to show some weakness out here. Going to the break, we'll look at this one again, but let's look at Lowe's and Home Depot. Are they telling us anything? Today, this little gap down really gets us back underneath this congestion zone. It goes back from April pretty much to May. So is that telling us anything? We'll look at HD2.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what do we got going on? Oh, we're talking about Lowe's. Very interesting action that this kind of gap down today across, I'm going to call it late March all the way through May 16th, where this kind of went up. It's back down to that level. You would think that this would probably be your buy point if you were looking at this market, but a little bit more volume coming in. So, of course, the next thing you want to do is look at Home Depot and see if anything's going on in that. Now, this one had a higher volume high, but man, did it give it up all in one day, and that was on August 2nd. Been beating around 136, 137 area last time on May 10th, then on August 2nd, and it's pretty much rolled over. The energy on the June 27th to August 2nd leg really didn't have a lot, and of course, been kind of rolling over out here. Housing numbers really haven't done a lot to push the stock higher. Really looks like it's just kind of bought out at the moment for both Home Depot and Lowe's. I don't know if I'd be pulling the trigger short here, but certainly interesting. Palo Alto Network. We've talked about this one getting back up to its gap over the last few days. And, you had a huge day out here on an upgrade on the 1st of September, almost 5 million shares. Since then, it's kind of come back up into this gap. A lot of shorts in this stock. I suspect that a lot of what's going on right now in this light volume is just pushing shorts out of the market. And I think that's kind of what this one did on the upgrade and all the stuff back here on September 1st. Within a couple of days, though, all the shorts back out. You're back into this big gap down. That gap down happened with almost 12 million shares. So you gap up, or you move back up, really. What is that, 8 million shares and then about 4 million shares. I would suspect that you got 127 back on Palo Alto Network on a failure. You got a little doji out here today. Options are saying that this thing probably wants to expire around the 130 level too. So we'll keep an eye on that one come Monday. What else do we have? We've been talking about SodaStream kind of coming back from the dead, actually gapping back over its gap, forming a second gap. It's kind of coming back into it now. So $25.50 would probably be the level that you'd want to look at this one. If you love this as a Wyckoff pattern, if the market decides to turn up with us. But at the moment, not a lot going on in that. Down on light volume today of 113,000 shares compared to this gap up of 500,000 shares. So without a lot of stocks giving a lot of signals, that one is interesting. XOP, the oil and gas, the question was whether or not it was going to get up to the $40.82 high of October 8th, 2015. That's $40.82, 16 million shares. Now, you got a pretty good day out here with 14.8 million shares. I thought crude would probably move back down to the low 40s. I think a lot of people got way too short this thing to push it back up the last time. It may be the exact same thing happening out here today. But volume is pretty much on the side of XOP, at least today. We'll see what happens in the next couple of days. Some of this may be a shell game. I'm hearing a lot of discussion about stocks, ships circling the Gulf with crude. Anyway, that's all we have time for today. We'll see you tomorrow, same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.